Good morning, ladies and gentlemen. It is time to rise and shred. We are live with the one, the only Jacob Gaffney. I'm excited to be joining this morning. And if you're joining us live right now, comment hashtag rise and shred. It's early. It's time to start the week. And Jacob, there's a lot of big things coming up this week. There's a lot of good stories. But before we get into any of that, we got some good things to talk about, my friend.
We do. It was crazy last week, man. It was crazy. And it's crazy this week. It is just, I've never seen anything like it. And, you know, we need to talk about it. We need to talk about it.
Let's start. Let's dive right into it. Where are we starting today?
All right. Let's talk about the elephant in the room.
All right.
Okay. Like, this is something we normally don't do. We're apolitical here. But let's talk about what happened at the Capitol last week.
Yeah.
Okay. All right. We're still digesting what's going on. But I want to use this as an opportunity to talk about communicating appropriately. So after the Capitol incident came out, we had institutions in the mortgage and housing industry release statements. WTF.
Yeah.
WTF. I mean, what? Did you release a statement after the Capitol riots?
Nope.
Did I release a statement? Is it appropriate to communicate that message at that time? Maybe so, maybe not. But it's a little bit of a head scratcher for me.
Sure.
You know, because and we're not going to name who did it, and we're not going to, you know, but I mean, it's a little bit of a head scratcher for me that you would release external communication when what that really shows you is that we need to be focused on our internal communications. We need to be talking to one another. We need to be making things right within ourselves. So I think everybody needs to think about how they communicate with their teams. We haven't seen each other in 9 months. Right. You know, you and I haven't been in a room for how long, Josh? When was the last time you were in a room?
Oh, way too long, man.
Year, right?
Yeah.
So now that we're doing it, we seem to be really, really kind of maladjusting the types of communications we're doing with one another. And I just love to see the mortgage industry just take a moment, reach out to your teams, everyone, okay? Make sure they're okay. Everybody's totally messed up, okay? Everybody's all over the place, okay? We don't need press releases. We don't need statements talking about how you sympathize, empathize, anything like that. What we need is you talking to your people and listening to your people talk to you. That's what we have to say. Okay, I'm off my soapbox. I had to have my 2 seconds to get it out there. But let's talk about the news. That's what we're here.
This is true. Real quick, because I want to my 2 cents on this too. Exact same thing. When I see press releases, when I see people, PR companies pushing this I don't want to say agenda, but like they're not worried about their people. They're worried about just making sure their voice is heard in all this. And I'm like, what are you like? Worry about your own. We're in a relationship industry. You should be focused on your teams. And I just didn't feel like that's what was going on. So I 100% agree with you. As everybody knows here at Rise and Shred, we try to stay agnostic. We try to stay in the middle of everything. But this is something that I wholeheartedly agree with you, Jacob. We need to look at this internally, ladies and gentlemen. So reach out to your teams. Make sure. And this is a true statistic. I was talking to one of our really good friends. They own a mental rehab facility, and they were telling me that their numbers are up 77 times what they were in 2019. People have issues. So as a leader of your company, as somebody people look to, you need to reach out to them and just communicate. So on that, Jacob, agreed.
No, I could tell you something even more than that statistics, which is shocking, Josh, but it doesn't surprise me.
Yeah.
I mean, everybody's struggling. You know, people are struggling. Bank rate survey out just this morning found that only 39% of American households have more than $1,000 in cash.
Holy crap.
That means 2/3. Okay, so we flip it, right? The real angle there is 2/3 of families need to use a credit card should any emergency come up. Any emergency. Okay. And we're living in a world full of emergencies. There is a new emergency every single day. So but money's money. But man, hugs, right? You know, hug your team and listen to them, because chances are they're giving you cues that they're not following your communication. You got to look for those triggers, right? When you're talking to your team and your team's talking to you, when they go like, but I thought you said, you know, you hear like that, or what? And whenever there's that little bit of doubt in their voice, take a moment. Stop, take a moment, stop and say, hey, I'm sorry that I'm not talking to you, but, I do care. And, just because we can't be together in the same room, and when these crazy events are happening, we just need to focus on ourselves, and that's it. So
I say now we can all sigh. Whew, we're good. We got that off our chest. So let's get into some things that were big top stories, a lot of conversations around them. Where do you want to start? You want to start Amazon? Where do you want to start here?
We could start with Amazon. You know, we've been talking about Amazon a long time. I knew a couple of inside sources, and I broke the news when Amazon was originally trying to get into the mortgage game.
Yeah.
You know, that was a crazy big story, and it still is. It still is. They are not engaged in conversations with the mortgage industry any longer. They've typically put a big pause on it. They've had a couple of. You remember I wrote about how their healthcare deal fell apart too.
Yeah,
you know,
yep.
They've had a couple of ventures, but I think it's fair to say, like the rest of us, they've been focused on their core competency for the last 9 months.
Right.
They've been focusing on getting boxes to your house. That's what they're after, not getting you in a house, getting a box to your house. And that's been enough for them, I think. And they've paused it. So all their mortgage stuff that they have online hasn't gone away.
Sure.
It's not like a URL not found kind of thing. It's still there. It's just not active.
I say they're not pursuing it like everybody thought. When there was whisperings of Amazon was entering the mortgage industry, it was like, oh my gosh, it's the end of mortgages. We know it. It's the end of mortgage originators as we know it. And it was just like, whoa, hold on. Pump the brakes. Like, let's find out. Let's get some facts about this. There's still a lot of unknowns. But I've said this. You said this from the very beginning. Why would a company, why would Jeff Bezos completely do a 180 from what he is absolutely dominating and crushing? Again, everybody says whatever Jeff Bezos touches turns to gold, but he's really good in his field. Like when we talk about this on the show a lot, like focus on what you're good at. Don't go here, don't go here. Keep your blinders on and just go all in on that. So I agree with you. I just think I don't think it's completely off the table, but it's not their focus right now.
Yeah, and it's just like the iBuyers, right? The iBuyers, right. Same thing. People talk about disrupting the market. I even fell for it. I thought at some point, oh my God, this is really going to mess with LOs and their ability to do work, and brokers especially are going to do all this. And then I was reading research, you know, that their projected market share is so low, right? It's so low right now that we should be okay. It's the same thing with Amazon, right? It's an interesting talking point, but in reality, it's not something that we need to. But hey, we're keeping our eye on it.
Exactly. Well, and again, as things break, that's what you're here. That's what Rise&Shred is here for. We're going to tell you if anything changes, you guys got to tune in every single day to find out what's going on. Let's go to our next thing, bank bribes. Now, this is something like, woo, like this is, again, we try to keep things lighthearted here, ladies and gentlemen, but this is some things you need to know. So there's been some bribes going on that we should probably be aware of.
So huge story. No wonder it didn't pick up at all last week, but you're talking about, right? So let me just tell you what happened. Deutsche Bank, right, which some could argue was extremely responsible for the subprime market collapse in Florida.
Absolutely.
Back in 2008. Okay. This has been 13 years since they were uncovered to have done all this salacious kind of backhanded dealings. Now the SEC has found that they've been bribing foreign dignitaries as a course of business. So let's talk about that.
Yep.
You have a major global financial institution that is using bribes as a form of business. I mean, it wasn't just like one or two off deals. This was a regular and repeated thing to secure business for Deutsche Bank. And they were found. So it wasn't just like the managers. It was the lower level people. It was the administrators. It was everybody from the office assistants that were like signing off on these. And they all knew that the owners were going to sign off on the bribe. How do we make the bribe? Let's go see. Oh, you get a bribe, and you get a bribe, and you get a bribe. Okay.
It's like, Oprah, you get a bribe. You get a bribe.
It was everyday form of business. How is this not a bigger story? Well, I think we know. But the truth of the matter is billions of dollars. And, you know, they just hit a fine. They'll figure out a new way to do it. There was no call for corrective action. You should go in Rise&Shred, look up the SEC filing. You know, we can only, because we do an email, you know, we do the summation. We want you to have a minute, 2 minutes tops, get all the news in there, be able to read it. But if you go into the Rise&Shred, you click on that SEC document, you will see that it is a lot deeper and a lot further than we're able to even touch base on right now. It is crazy. It is nuts. And you have to ask yourself, Josh, are they the only one?
Dude, this is exactly what I was going to say. Okay, Jacob, so we're just kind of seeing like if Deutsche Bank is doing it and they're getting away with it, how many other companies are getting away with this? Like they got caught. And again, it was almost just, again, they were fined. There's a penalty, but it was, to me, it was almost just like a slap on the hand. Like, oh, well, dang it. And it's like, well, wait a second. How many other people, how many other banks, how many other large financial institutions are doing this and we're just not talking about it?
It's crazy. And we've also saw last week, in real estate, how they're able to use financing to for entities. You just pick up talking about terrorism, right? But here we have foreign influencers buying into real estate in the
Oh, hold on, Jacob. We might have lost you right there. Hold on just a sec. Oh, there you're back.
Yeah.
Yep, you're back. I got you now.
Sorry, happens every time.
Gotta love it.
All right.
Gotta love technology.
Where'd you lose me?
When you were just talking about some of these foreign influencers.
Yeah, so foreign influencers are using real estate. They're trying to close these holes in the real estate market that prevents vacant homes being purchased and just sitting there and being operated as shell companies. So they passed a new law that came into effect January 1st that we talked about that's meant to limit that. There are doubts. These operations are so sophisticated compared to what our regulatory authorities have that it's just crazy. But I cited the example. I got one in my neighborhood. I know you got one in your neighborhood. It's a beautiful house. It's vacant. Who lives there?
Exactly.
Right? We don't know. And these institutions are using our real estate as a way to funnel their money through. And it's just, the regulatory authorities are just getting on. They're just trying to figure it out. But I don't know. I don't see any enforcement action coming this way anytime soon.
Nope.
They're going to keep after it. But I don't even know which entity would go after them. It's crazy that the luxury real estate market has these bad players in it. But like the iBuyers like that, it should not disrupt our listeners.
Right.
Yet, so.
Yep. Well, which kind of leads right into the next kind of as we start to wrap up. There's a lot. 2021 is going to be one of those years. We broke this story on Friday. Oh no, it was today's. But 2021 is going to be a huge year financially for the mortgage industry. Let's talk about that a little bit.
Well, I was actually pleasantly surprised to see that. I knew that we were going to have a good year. I still don't know if I believe Chris Whalen, saying we're going to do a $4 trillion market up to a that's 2020 numbers. That's crazy numbers. Can 2021 match 2020? It appears possible. There's crazy money out there in real estate and in mortgage. It's crazy money also in the stock market. We have IPOs coming left and right. There's actually this funny thing. There's actually an acquisition company that's starting that's actually going to have the stock ticker LMAO.
No way.
Yeah,
that's awesome.
It is literally it's LMF Acquisition Holdings, right? But they couldn't do LMFAO.
Of course, yeah.
But so they did LMAO, and it's a blank check company. It's a company that's just gonna get money crazy. I have a client that's announcing a Series B tomorrow on embargo. I got that out with reporters, right? Can't say it today. Talk about it. It will be in the Rise&Shred.
Yep.
But there's just all this money going in the IPOs, and all of that is based on the fact. So is it a bubble? That's right. That's what we have to worry about. Is it a bubble? Well, as long as the Federal Reserve keeps the interest rates low, we should be okay. There's so much demand right now where the money's going. I'll go into this a little bit more in Rise&Shred, but master plan communities, that's where people want to buy. They want to buy in the suburbs in something that is very uniform, safe looking, has the amenities of a home office, et cetera, et cetera, et cetera. We'll get into that. That's what everyone's building right now, right? Everyone's building master plan communities, all the home builders. That's what they're building, the new homes. So we appear like we are staying on course for now. What could disrupt it? Stock market crash, obviously. It's at crazy highs. But But we have an administration coming in that has shown an appetite for, keeping things going, keeping the stimulus going. And there's talk of another stimulus, a third-ish round, March. So we'll see how that goes. That would help. But that still goes back to the fact that the average homeowner is struggling. The average worker is struggling. So we have to keep things in perspective. But right now, just stay the course.
I say stay the course. There's a lot of things that are possibility of change. And again, we're not the doom and gloom. We're not trying to scare anybody, but right now more than ever, I go back to what we started this as. Communication is key, not only within business, not only with your teams, but within family, within your household. Communication, just being aware of what's going on in our world. And that's what we're so focused on here at Rise&Shred, is bringing you the things as a mortgage, as a real estate professional, the things you need to know. You need to be aware of what's going on. So have those conversations, have that communication. And again, if you do that, if communication's at your core, then when these things happen, because it's going to eventually, ladies and gentlemen, I mean, history has proven that, is that the bubble will burst eventually. Mm-hmm. So communication is key. Have that. And that's what we're here for. We're here to communicate. We're here to bring you the best of the best when it comes to the news, the things that you need to know within your industry. So Jacob, anything else that you're excited for this week or that people should be aware of?
Oh, I'm gonna wait and let you read it.
Teasing it, guys. You gotta, if you haven't subscribed already to Rise&Shred, click the link below. You can do it right now. You don't want to miss a single daily dose of industry awesomeness, because Jacob is continuing to throw it out there, and we're going to bring you every Monday morning. We're doing a recap of what things that have happened and things you should look forward to in the upcoming week. So Jacob Gaffney, thank you so much for hanging out, my friend. As always, you're brilliant and inspiring.
Thanks, Josh. See you next week.
We'll see you guys next week, guys. If you're just joining us or if you're live with us, make sure you comment hashtag Rise&Shred. And again, click below so you do not miss a single dose of industry awesomeness. As always, we appreciate you. We love you. Now it's time for you to go shred, go show up, hustle, repeat every day. See you guys. Hey, what's up, everybody? Thank you again so much for joining us for today's show. If you like the content, make sure you hit that like button below. And if you already haven't subscribed to our channel, click right over here and you can subscribe to our YouTube channel. And if you want to see our latest video, click over here. And again, if you want to see the best of daily content within the mortgage and real estate industries, you have to subscribe now. We look forward to having you shred with us every single day.